Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, December the 26th, the year 2018. Let's talk trading. It also happens to be Boxing Day, so happy Boxing Day. For those of you who don't know what Boxing Day is, it's basically a tradition celebrated in England and a few of the countries that they've conquered, such as Australia and New Zealand. It's the day after Christmas, and that's the day that the masters gave servants a Christmas box, and they let them have the day off so they could go home and have time with their families. So, happy Boxing Day. And for me, it's the day I get out my razor knife and cut up all the boxes so I can take them to recycling. Anyway, trading. I noticed one of my old trading buddies said that the Australian yen, I guess, was cleaning his clock, eating his lunch. I mean, how does that happen? Well, he mentioned that maybe he wasn't using money and risk management to the best of his ability. It's hard. And actually, it's not really hard, but we as traders make it difficult. Somehow, when we enter trading, we don't seem to accept the fact that not every trade is going to be profitable. And so we'll do things like add to a losing position. Now, the problem with that is that sometimes it works out. And every time it works out, it reinforces that bad habit. And you might get away with it a few times. But sooner or later, it's going to bite you. And if you don't have your money and risk management employed, it's going to bite and bite hard. And if you're not careful, it might just eat you alive. So it gets back to those videos that I've talked about, and a lot of people are talking about it. I mean, habits, rituals, morning rituals, things you should do when you first get out of bed. I mean, it all goes back to that. I mean, things you should do before you actually start trading, before you press that button to enter a trade. And the thing is, you know what they are, especially if you've been watching my videos. And for each person, they can be slightly different. But the thing is, the only way to make things different is you've got to change. And usually it's an internal change, not external. Because I saw a little meme, or I don't even know where that word came from. Everything's memes now. Or, poster, cartoon, where it says, it had like a little mark down here that says, what got you here won't get you here. So in many cases, that's probably true. So the difference between here and here is you've got to change. You've got to do something different, or you have to do something you've never done, or you got to stop doing something that you've been doing because it's not working. So let's take a look at the euro yen. 45 pips off the low. I think yesterday, wasn't it about 20 pips off the low when we made the video? I'm not sure. We still have 2 gaps to fill, 3 gaps to fill. Something to consider. We're outside the lower wick zone of the previous week. We're 13 pips below the open of this week. You can see here we're outside. We broke out of that previous day's low. Actually, we started outside of it. Now we're above it. And you can see here we went into the upper wick zone. but we came out about 12 pips out, 25 pips off that high. Only 71 for the range. You can see here dollar yen's 86. It's beating the euro yen, but this is a holiday week, so you can see things are quite different. That being said, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 pairs with range over 100. 2 of them over 200, with the Australian Swiss franc actually outpacing the new beast and the old beast. So it looks like something's going on with the Australian pairs, and there's that Australian yen that one of my trading buddies was discussing. Oh, something I should mention. Those of you wondering, why are some of these numbers in purple? That's because it's within 5 pips of the daily open. That's the threshold I put. So right here you see that one's 6 and it's red. That one's -4. So that means you can still, you have enough time to get in on a buy zone trade if you want. Okay, yesterday we hadn't quite hit that pivot point when we looked at the chart, but you can see here it finally did take out that pivot. One signal in the buy zone. Remember, I made that video yesterday, the Christmas, we had a gap. Now, I want you to think about it. We had a gap on Christmas. What do you think might happen on New Year's? You think there could be a gap that you could exploit? I'll let you answer that question for yourselves. You can see here we've crisscrossed that weekly open a couple of times. And right here, the rats, red rats, got a nice trade in here. We're going back, seems like we're going back up, so red rats might be ready to feast again, or at least maybe not feast, but at least get a few nibbles in. And you can see here, we've got a really compressed day and so we took out that pivot. Here's the weekly open. There's the weekly pivot at 127.12. We haven't hit that weekly pivot. So we've got a couple of days that we could actually hit that weekly pivot. And you can see here we missed that pivot. And I believe this was on Monday. Because you see here, this is still... Actually, no, this is the 1226 candle. So you see here we'll have a 4 candle week here. So we may or may not take out that pivot. Let's stay tuned, right? Price action, we had that big 3 ball yesterday. 1 ball signaling go red at the line. 1 ball here signaling go green at the line. Now, once again, if you're not an experienced trader, let that candle close. In this particular one, you see it's green at the line, but there's still a 1 ball. If you want to take that trade, just be careful. Of course, you be careful in all trades, but just remember, things could snap back on you. Trading candle color at the line, you can see here. If you didn't scratch that trade, you may have gotten a stop, depending on where you put your stop. Or if you wrote it out, you can see here, the same thing happened, same thing happened. So this is telling you we don't have a close below this line. So this is telling you that price doesn't want to close below that line so far. And see here, we only had 1 close above that line. And once again, this price spiked up. You see it cross below that wick. So somewhere in this area, should have taken your profit, been happy. Speaking about wicks, in and out of the zone, came in, came out, in and out, in and out, in and out. You see that? Price didn't like that. And right here, in and out. So once again, wick zone trades profitable. So if you're losing, like my one trading buddy, what are you waiting for? I mean, there's a couple of ways to look at it. The first question that needs to be answered is, was there an opportunity to take profit? And if yes, why didn't you? In other words, what were you waiting for? Were you waiting for a one-to-one risk reward? Because you see, that's all good in theory, but as Mike Tyson says, you walk into the ring with the plan, and that first time you take a punch to the face, that plan kind of goes out the window. Well, see, in trading, don't let that happen to you. I mean, you have this plan, but if price goes up a couple pips and you want it 5 and it starts going back on you, and then you get stopped out, well, you could have taken 1 or 2 pips. You could have scratched it at break even, but you decided to wait. Why? Because see, the signals and the conditions before you entered the trade, well, they no longer really exist. Something could have changed since then. You have no idea. A new player could have entered the market. You don't have an idea. That's why you have to trade in the moment, a Zen type of thing. Be here now and not see all this stuff here. It doesn't matter. I mean, if price crossed this line and I'm looking to go long and then it wiggles up and I jump in and all of a sudden it comes the other way, I've got to get out. Even though this says, well, price hasn't closed, so maybe if I wait, it'll close above that line. Yeah, well, maybe if you wait, it closes down here too. You don't know. You take the chance. You have to be smart about these things. And and don't worry about what you could have had. Oh, if I would have. It doesn't matter. Just grab your pips while you can. Speaking of which, here we've got the holo right here. You can see put in, came back, gave you another opportunity right here. Price made a high, closed, came up, started going down. Right there, boom. Pips in your pocket. You just have to trade in the moment. Inventory retracement, there was a short trigger there, basically a couple of pips. Remember, that's all I look for, even though some of you have been making bank off of this. Right here, there was a nice gain here. So, I mean, if you can sit there and let that candle close, just wait, just wait, just wait and see what it does. I mean, there was a nice trade there worth at least, 10 or more pips. Could be 20 if you rode it all the way there. And you can see here we had another long trigger a couple pips ago in that last candle. Once again, candle color at the line. You can see I updated the indicator. It'll go out in the final batch. So now, and I also put the spread. I mean, I'm calling this indicator spread dots. And all of a sudden I realized I wasn't showing the spread. And so I put that up there. And the nice thing about this is yesterday when the spread was just whacked, I just said, nope, I'll wait for the spread to normalize before I enter a trade. And you can see here what price has been doing. Slowly meandering to the upside. Once again, we just had a cross where the bid jumped above the valley of the ask. And you see we've got buying happening. Einstein line, one trigger, up about 6-7 pips there. Nice. So that's it, fellow traders. Happy Boxing Day. Just remember, it's not what you trade, it's how you trade it. So as you're trading, make sure you drain the banks.